Hi guys, welcome to Gold Today. This video is brought to you by the coach. Remember, always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We are going to start our video with the economic calendar. On the economic calendar for the coming week and from the United States, we'll be waiting for the following economic headers to be released. The services PMI, it will be released on Monday. ISM manufacturing PMI, trade balance, imports and exports and other important economic headers on Tuesday. ADP non-farm employment on Wednesday, and the non-farm payroll very highly important on Friday. That's all for the economic calendar. We'll move on now to the numbers. On the last week, gold traded between 1510 as a low of the week to 1553 as a high of the week. Numbers are rounded and the market is closed. On the last trading session of Friday, gold spot printed a closing price above 1551. The number is rounded and the market is closed. Gold is trading in an uptrend and it's now above its all daily simple moving averages, and the momentum is seen extremely strong. For the RSI readings, we are well overbought on the one-day chart with a high reading 86, then 70 also overbought on the weekly, and 68 moderate on the monthly. Supports are 1515, then 1500, then 1478, and the resistance are located at 1556, followed by 1578, and then 1600. That's all for the numbers. We'll move on now to the trading strategy. Hi again. In our last video, we said that gold is still having the strength to break the multi-weeks months resistance located at 1515.45, and we said if so, and if this tough resistance is taken convincingly, it shall open the door for a test of the 1556, the high of the last rally. I've been actually shocked, and I've been anticipating a dip from around 1530, which was supposed to take gold into a retest to 1515.45 or even to 1500. That did not happen. Also consider the very late developments in the Middle East and the airstrike that have been carried out by the U.S. Forces into which resulted into the assassination of one of the highly esteemed generals of the Iranian army. The market was on the edge on the last trading session of Friday, and we have seen a very huge move in gold, which is very normal. It's a safe haven demand, and now we will be talking about the our forecast for the coming week and how gold should play in the following sessions. As I have said, the situation that we are having right now in the market is totally depending on the news, especially from the Middle East. But this shouldn't make us neglect the fact that gold is extremely overbought. On the one-day chart, it's 86, and I've never seen something goes beyond 90 unless a war happens. And dip is very reasonable from these prices, and very should be welcomed by the market. And I see a dip like that could take gold to 1525, or maybe to the place where we've been struggling the last week, 1515.45, and that will be a golden chance to buy gold. I don't see it wise right now to go into the market and buy while the market is crowded like what we have right now. We wait this dip and we accumulate for a move toward 1690 by month of March. What Americans have done on the last Friday is not going to pass smoothly. Iran is a well and big established country, and they are going to hit back. I don't know when they are going to hit back, but they should hit back. and that could start a war that Americans has no chances to win. That should be your focus beside buying the dip. So what we said, we buy the dip, we look for a dip from 1525 to 1515. That will be a golden chance to buy gold. Don't lose it. On the other side, if you have any news headlines that any escalations happens in the Middle East, any move of the forces from the Iranians or the Americans, don't hesitate to buy gold at any price, even at 50, even at 1600 or 1650, whatever the price, buy gold, because it's going to go much higher if a war started. That's all for this week. Thank you guys for watching this video. Please share, like, and subscribe, and I'll see you next week in another video.